Okay, good morning traders and welcome to the Bookmap Pro Trader webinar today with Scott Pulcini. Good morning traders and welcome. We do this webinar every Thursday actually with Scott. This week it is the Pro Trader webinar series. Tomorrow we'll end with Charles Goff from Pirate Traders. He also streams with us weekly on Mondays. So this will be a different event though. This is a Pro Trader webinar. And he'll go through some different things. Anyway, let's get in here with Scott. You guys know who Scott is. He's been trading for over 20 years and he was responsible for trading, which I still can't believe. It just boggles my mind, the amount of pressure. 10% of the S&P E-mini futures volume back in the years between 2002 and 2005. So each tick is probably about 50 grand or something like that. But anyway, he is expert scalper with an innate ability to quickly read the order flow and volume within the price patterns. I have Scott's information here. He has a website. He offers mentorship. You have his email, his Twitter. He has a trading room, and he has educational courses on the Bookmap marketplace. I'll put these links into the chat for you so that you can reach out to Scott directly. Let's go through the disclosures and turn it right over to Scott. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, with that said, let's see. Scott's got his screen up. Let me share it here. And take it away, Scott.
Alrighty. Still hear me, correct?
Yes.
Okay. All right. So, my own personal fast market today. Missed a trade. I've been show you this whopper and soybeans I just missed, but I'm gonna hopefully catch this trade in Nasdaq. So we had a stop run here. I'll go over all this in a second. So the spreadsheet we use in my trade room. Well, what was that? I don't know what that was. 717.50. So this is a spreadsheet we use in my trade room to enter in our zone prices. Actually, I just screwed that up. Hold on. Screwed one already this morning. That's the top of the zone. We'll go over drawing these zones. I know there's a lot of new traders on here and a lot of traders new to Bookmap, and I will go over all this here, but I want to get this in. So it's another trade like I did earlier. Then I traded the wrong month in crude, so it's not a good start to the day. I'm getting a little active, like in the last 2 months. I'm kind of blowing it already, so hopefully I can get back in track.
Icebergs sell GC 151 contracts.
All right, so let's see if I missed something here. All right, nothing yet. All right, so this is the latest, actually two events here in Nasdaq. You had a stop run. I just drew that zone. You had some little sell ice there. This was threshold sell ice here. That was in the same zone, so I don't have to change anything. So this is basically a delayed double whammy. So this is one of my 6 setups that I have that we trade off the SI indicator. So this is called the Stop Iceberg indicator. Most powerful thing I've ever seen in my 23 plus years of trading, showing you with certainty, 100% certainty, stop runs and iceberg orders. Iceberg orders are hidden orders in the order book that are the big money playing that they don't want to flash their orders in the order book. That cause the algos to run the orders away from them, so they have to hide their orders. So that's what I trade off of. I need to eyeball this to see if this was already disqualified as a long setup. We'll go over all this here in a second. I just need to get my bearings, what's going on. So this needed to trade 0375 to make that a short setup. All right, so for this particular setup that fired off, it was only technically a short setup. So the way I judge these zones from watching about 5 million of them in the last 4 years is if the market can push an ATR, a 5-minute ATR away from the zone, then this is a bearish setup, and I will not take longs off of this particular setup. And so this, I would have taken a short here if this market had moved back down, but it just ripped right through it. So this is disqualified either way for me from trading long or short for this particular volume setup. So I sit here and wait for the next one. What's important here is you can see that all this resting liquidity up here, and you can bet your bottom dollar that these guys will all get filled, because they always get filled, because this is the big money that runs the show, and they will push the market into their orders eventually. So most novices that get Bookmap look at that and they're like, wow, that's incredible. A lot of people want to sell up there. I want to be short. It's the exact opposite. These guys, the longer this has been in here on top of it, the more these guys want to get filled, like these were earlier. And they get their fills, and then it can finally go the other way. So we have actually a trade that trades towards this liquidity on my trading strategies, which we'll go over. Hold on, I got to try to figure out where this damn word is coming from. All right, so nothing really going down in here right now. As far as bigger pictures, this is what we go over. All right, so we do have a volume setup. So this is an important zone. We call these inflection zones in my room. These are where prior important things happen in the market. You see, you can go back here, both these zones. See where we're at here. 15741. So this is an area where this was back in, I don't even know when this was. Hold on. Back in last August is the last time we were up here. But you had selling tail, and then you had a gap down. Actually, I could have brought this down a little further, but this is where we're approaching, and then this is the zone, gap down, and then the market's never returned here till now. So these are important zones where this market could fail. I'm not real excited about shorting, but this market's moved quite a bit from yesterday. So these are areas that the market could pause and pull back to, some of the structure. You had a little balance here that it ripped out of yesterday. You had balance here that it broke out of. Then you had bigger balance here that it broke out of. So nothing about this tells me that it's bearish, but I'm a day trader. I will take shorts, especially with the SI indicator volume setups, because that's the real-time volume coming in, and those could be short setups, and then, you take the quick trade and you're out. So this is an important zone. It's been in this important zone. So we just heard a volume setup. I think one just fired off in here. Did I say? Yeah. So I will trade this aggressively to the short side if it presents itself, and I'll also take a long with different strategies that we have in my room, and I'll go over these strategies as they present themselves, like I said. So let's draw this zone. So best way to draw these zones is you find the spike on your chart. So below zero means it's sell ice, above zero means it's buy ice, buy icebergs. Same with stops, sell stops, buy stops above and below. So what you want to do is use your little, you can see this bubble here. That's not helpful, obviously. You want to take that off, and you want to get this last price line on your chart. You right click the chart, configure visible components, make sure this is checked. Then you can see the actual traded prices, so we can draw our zone with accuracy based on this spike. So then what you do is, you have your crosshair and just follow where this started to come in. You can see the prices were started there, but it came down to here, and that was still engulfed in this spike up to there. So my zone will be drawn from here up to there, and I try to color my zones accordingly, just so I know what's going on. This was sell ice. I use black for sell ice. Step one. The step one is figuring out where you're on the bigger picture, but you should have all that down in your, pre-market. You should know exactly where you're at. And I'll show you how I screwed that up in soybeans, because I didn't know exactly where we're at, and I missed a trade that I'm going to keep talking about because it was a whopper. We'll go over here in a second. But you want to know all this stuff beforehand, so when the stuff starts firing off, you're not scrambling to see where we're at. You already know. All right, so the top of the zone's 13,732.75. So I come over to my spreadsheet again. This is proprietary to my trade room. Join my trade room. You get access to this. This thing is a godsend. It's just so helpful in getting exact prices. We'll go over each one of these, what these prices are, what I'm doing here. And, so the top of the zone was 32.75. The bottom of the zone is it's like 26 quarter, 13.726 quarter. And the other really important thing is adjusting for the volatility, current volatility, right? Say at every webinar, a lot of you traders out there are trading with these static stops, like an ES. I like to risk 2 points to make 6, and you're just putting in, you're risking 2 points every time. Well, yeah, 2 points might work in this type of environment. How it's been the last 2 months when the ATR is 2 and 3. When the ATR spikes up, like right now, 2 points would be all right. ATR and the ES is 3.6 for which means it's rotating about 3.5, 3 3/4 points every 5 minutes. But days when it's a 12 ATR and you're risking 2 points, you're going to get stopped out very, very likely just on random rotations. So that's why this is so important that we adjust to this. So right now, this is the hourly. So this is the default on Thinkorswim. And this is a 5-minute, 14 period Wilders. That's all it is. So it's basically taking the last 14 5-minute bars and judging the volatility. All right, so you can see there the ATR, middle of the screen there is 14.6. That means it's rotating about 40, which is pretty low for NASDAQ. Again, 20 is usually average, so 14 is still pretty low, especially when this thing feels like it's whipping around right now. Get that out of there. So let's put in 14.72. And you want to keep adjusting this until you get your fill, right? So now we can judge based on this volume setup if this is a bullish or bearish setup. I already know because we're in an inflection zone in ISI trade, and that's these are the trade setups that we're using in my room right now. And I've got about 50 behind these, but we're doing one at a time, and we're keeping exact stats with these Apex accounts. We'll go over that a little bit later. So these are different, obviously my trade room has access to all of the descriptions of all these. I'll go over them as I put them on, but that's one of the perks of the trade room as well, right? So what I'm looking at here is the inflection zone trade, aka ISI. We've given an acronym, and usually they're pretty funny, like the BARF, things like that, just to make it memorable. And you gotta laugh in this. You gotta laugh in this game, or you're gonna lose your mind. You probably lose your mind anyway, but. All right, so if this moves out of this zone, I am aggressively short at 13,709. And what's great about this spreadsheet, you put your ATR in, you put your zone prices in, and it tells you your exact risk in points and how many contracts you can put on. So for this trade, I can put on, and I round up, I can put on 7 MNQ based on my account size. So again, I'm doing the Apex account. This is showing I'm risking 10% of these accounts. So I'm trying to get all every one of these trade strategies will be live eventually. The one that's live right now is actually it's the ISI trade, so that one's live. But what I'm showing here, and then like this one's closed, so these are all getting up there because we just started this like late February. And I'm with trading, it's all about percentages. So you take every trade, and you grind up in your P&L. A profitable trader with an edge, your P&L looks like that. It doesn't look like that. Some days you'll catch that, but other than that, it's one of these, right? And then you run through a bad period like the last 2 months has been, and then you gradually make your way back. So, these are building up gradually, and these will all be live eventually. But the ISI trade is live right now. I forgot where I was going. Oh, so what I was saying is, you see here I'm risking, you see another beauty of the spreadsheet, you put in your account size, right? So if say you had a $50,000 account size, plug that in here, you obviously don't want to be risking 10% of your account size on a real account, right? The most you should be risking is 2% of trade, meaning if you have a $50,000 account, what you should be risking on any trade is 2%. You plug that in and it tells you what to do. It tells you exactly what you're risking. This doesn't matter. This is going to adapt to the volatility. What matters is how much you're trading. So you can see, like, if the ATR pops up to 40, which happens all the time, now watch what I can risk. I can't even put on a full NQ. I can then only put on 5 micros, risking $1,000. So that's the beauty of this spreadsheet, is it adjusts what you should be trading based on the ATR, the volatility. So right now I could put on 12 MNQ around up to 13, and I can short at 9/4. As long as this doesn't prove to be a bullish setup. So how do I determine that? Once again, that's in the spreadsheet. So if this market can get up to 740, 750, then my short idea is disqualified. And then a long is in play based on these zones, just because I know how the market reacts to these volume events. What is the tendencies, right? So I know if this gets up to 47 quarter, this is now considered bullish. If this market is able to push at least an ATR away from here, it has the strength to make this a bullish setup, right? Then my short would be disqualified. If that does not happen, then I will short aggressively as soon as this gets down to 0950 based on this. It's not going to really matter. I'm probably going long, but based on my trade strategy, this is the inflection zone strategy, which is it's an aggressive entry. So I have two types of entries as well for these volume events, right? So the conservative entry is an ATR, a retest, a failure. I get in just outside of an ATR. The aggressive entry is the minute it breaks outside of an ATR, I'm in, right? Because there's certain instances where it may not retest the zone. It retests the zone with ridiculous regularity. We actually have a trade in my trade room, and that's part of the spreadsheet as well, that actually takes advantage of that. So here's all the position trading strategies. But if you scroll down here, we also have, it's called the ATR reversion strategy, where we're actually playing, here comes the volume event, it gets an ATR, you would short it there, and you play literally just back to the zone. That's that. And that's just like an in and out trade and more of a scalp, right? So we have a 1 ATR, a 2 ATR, and then 3 ATR, which we trade because these markets retest these volume events, like I said, with ridiculous regularity. So we take advantage of that trade as well. So that's why some of these trades I will wait for that, then take it. There's other trades I'll get it right away. This one, as far as the long side of things, I'm not being aggressive, right? First of all, we're in an inflection zone that I want to fade if this market could stop here. So I'm not real excited about going long aggressively in this zone, which it could easily alter. That's number one. The bigger picture look. Number two, let's take a look at our Ludwig levels. Sorry for these split screens, by the way. I switched monitors. Now it's showing like my other monitors on here, but for that trade here in a second. Let's see where we're at here. So these are another thing how we judge the second most powerful thing I've ever seen in my futures career. These are called Ludwig levels. Just quickly, because everyone always sends me emails. What were those Lugie levels that you're talking about? Ludwig levels. So go to ludwiglevels.com. This is right here. So you can do the free three-day trial, put your name in there, comments, say you sign on a Bookmap webinar, and she has special pricing for you guys. But anyway, these are for proprietary levels that are just unbelievable as far as support and resistance, as far as targets, as far as coming up with a thesis and what the market's possibly doing. So I have 3 different ways to come up with a thesis based on the bigger picture type of look. We looked at the bar charts. Those are the 4 important areas of charting: the ISI zones, the inflection zones. We already looked at that. Then I look at market profile, how it's reacting. That's a Russell setup. We'll look at that in a second. Then I look at market profile. We'll go over that when that applies. And then you can come up with thesis based on Ludwig levels. So you can see these Ludwig levels they're very important, and very important for resistance. So this majority of the time will bounce off the red lug. Well, when it has enough strength to form new lugs, then the way it reacts to these lugs is a whole nother way of looking at the markets, right? So this broke through red. This was resistance. She calls it big red, and then it drew new lugs. Well, if this market's truly bullish, it should hold prior red and the current directional yellow. This is kind of like the mean or the median type of whatever proprietary, kind of like a VWAP type of thing, right? So if this is truly bullish, it should hold prior red, which it did, yellow, which it did, and then you expect the next red, right? This is coming up with a thesis. Doesn't mean it's going to go straight there. It may play games, but the way these are reacting to these lugs, I'm expecting this to get up to here as far as this thesis is concerned, right? So, but if say it did this and then all of a sudden it's below here and it can't hold this area, then you're expecting that. So these are just ways to come up with what's going on in the market. I have 3 different ways. I have the lugs, I have the market profile. And you can see we're heading up here to an important level in market profile. This is a prior market profile composite. Let's see where that was. Again, this had to have been that had been a while ago. Long time ago. There we go. That was this over here. So you have this one here. Actually, it could be adjusted a little bit. And then you had this one here. So we're basically heading to the top of this one right now. What's the price? 17. I think we're up here now, actually. So the top of this one, the bottom of that one. So these markets also will come to these areas. These are good support and resistance, or if it gets in, then that's good support. You know, support down here. So these are really good areas. All these are our composite areas. So meaning when markets overlap the single days, the value areas, which is 70% of the trade, I will merge them together and come up with a composite, which are extremely powerful, right? We just heard something in ES too, and I know how many people love to trade that ES, so we'll head over there. So this is how this was born, this composite, right? So that's what I do there. We'll go over a little more in depth as we come to other ones. But that was back in August. You can see this is an area where this could, you know, stop. So if I get a setup there, a new setup, because I think this is now actually a bullish setup based on what we're talking about, and we're coming up to an inflection zone as well based on the stuff I just showed you too. So we got a few things that could potentially stop this market. This last volume event obviously is not a bearish volume event anymore because it was able to easily get over an ATR above here. So I would play this to the long side. I know I'm saying there's a bunch of resistance up here, but until I get a volume event, I will play this most current volume setup to the long side if it comes back and retests. So we'll keep an eye on that. If not, I'm just waiting for a new setup, a new volume setup, right? A real-time volume SI indicator setup in this area. The new thing here, we'll go over this too. This market pulse is pretty incredible, and we're coming up with new ideas and trades based on that as well. We'll go over that too. I'll show you a couple of examples from this morning, like in crude, that I caught a couple of moves on that. All right, so we just heard something in ES. So quickly, let's take a look at the bigger picture, and then we can. So obviously, first of all, at the close yesterday, there was 35,000 buy ice right there. That's that blue shaded zone, most I've ever seen. And you can see what the market did, just rip it right through there. There's different ideas of what that was. Are they hedging their options flow? I don't care. I know there's someone on the other side of the trade. I don't care when you're seeing buy ice, sell ice. There's always been that misconception, or there was when this first came out when I was doing the webinars. There were competitors at Bookmap. There's really no competitors to Bookmap, but people that try to compete with Bookmap were trying to downplay this information, this iceberg and stop information, saying they thought I would say, okay, there's a buy iceberg. Do you want to get long? And that's not the case. Yes, it has a higher percentage of going higher because when you have the big money buying, you probably want to get on their coattails, but there's times that the big money's wrong, and we take advantage of that too. That's called the broken ice setup, right? The 6 setups that I was talking about earlier. So just because you see buy ice doesn't mean you just jump in and buy. It depends on how it reacts to the area, just like any other setup, but it's good to know. So for instance, it was really good to know yesterday that 35,000, by far the most I've ever seen in 4 years, came in right. It was after the close too, right after the close, the 3 p.m. close. That's good to know. And you can see if you're just like, you know what, someone bought 35,000, I think I'm going to go ahead and buy some too. Well, you got yourself, 15, 20 points in your favor as of right now. So that's not how I trade them, but I'm just giving you examples of that. I whatever came in there, even if they were hedging something, whatever, there were sellers on the other side. How are the sellers feeling right now? Not real good. And this is probably part of their puke right here that we're looking at with these stop runs, right? So you can see here, this is the latest setup. You had 561 at its height stops, and then there was 191 icebergs. That's not my threshold, so I have thresholds for each market that are tradable events, right? So meaning if this iceberg was by itself, I would not draw this zone and trade off of it. 191 is not a lot in ES. 700 or more is a lot, so I will trade off of that amount. Other than that, I don't pay attention to it. And all the stuff that you're learning is how I learned the hard way of trading these over the last 4 years. So you can kind of fast track what you're doing instead of having to watch 4,000 of these setups. You can learn how I trade them, and then you can adapt as you get better at them. If you want to make changes, like I always say, this is the science. This stuff down here is the science. The art is how you trade these zones. So my art, I would pay attention to because I've watched just from my experience of trading them. But as you get better at them, you can add your own art in and trade them differently. But there's no disputing that there was 500 stop runs here. What are stop runs? Usually it's just a retail trader puking. retail traders puking, right? Yes, you could stop into positions, but most of the time it's guys puking that put, so they're short and then they're like, okay, well, I'm going to risk up to here, and they put their stop orders in, and then when the market touches that price, it fires off their stops, and you can see the sweeps indicator here. So it swept the order book because all these prices had to be filled, or these contracts had to be filled. So it took that many prices for the stop run to be filled, which is about 3 points. Well, let me take a drink of water here. All right, so that's our zone. I already know we're not in an ISI zone, an inflection zone, so that's not in play. Let's take a look at, we have other strategies though, based on, like I've been talking about. Let's see what the Ludwig levels look like. Yes, here. So nothing Ludwig level wise. Just make sure this is refreshed. I forgot to restart my Sierra charts today. I don't think this was a composite. This was just a single day. So actually, I don't even think I have composites, because when you switch months, I lose all my composites. I don't think there's anything even above here. This was a prior one. Actually, I do want to pay attention to this. I cut it off, but you can see this was still relevant. This stopped here. So I'd say right around, I'm talking about this one I cut off here, right around 41.92. That's a prior composite where this could stop. Other than that, I got to get back in here and draw the other ones if this thing just keeps going straight up like it's been doing, but nothing as far as market profile, nothing as far as logs. What I am noticing here is we are obviously at extreme standard deviation of VWAP, and there's not a lot of volume coming in the market, relative volume, and that's this stuff, right? You want to really pay attention to this. So when relative volume is terrible, you get choppy range trade. When relative volume picks up, that's when the big money's playing and you get these extended moves. Well, many times when you get to extreme standard deviation of VWAP, actually this is one good thing about this new split monitor. You can see both here. When you get up to these extreme standard deviations, so this is VWAP, this is one standard deviation called daily value area. This is 1.5, this is 2. We're at 3 standard deviations. You have these algos that kick in that try to revert it back to the mean, right? Well, the algos usually get their way 80% of the time. It will come back there. This is just my estimations. I'm not saying it's exactly 80% of the time. If you're not seeing this kind of volume. This is elevated a little bit, one of these bars here, but this is kind of dissipating now, this relative volume. So this relative volume, this is on Sierra chart. This is a relative volume chart that's showing me the exact 5-minute period for the last 30 days. So I know for the last 30 days, like this was a ton of volume pre-market, right? I guess I'm on nat gas too. We'll go over the this is just the number coming out for nat gas. We'll go over there in a second. But anyway, this is an area where I know that they could snap it back here. So I just keep that in mind. Doesn't mean I'm just jumping in a short, but I'm just coming up with ideas like if this turns into a short set. Goodness gracious. What's going on in nat gas, man? Take a look. That's another great thing about the SI indicator. It's telling you when something's going on in these other markets. So 244 stops, and these sell icebergs are still coming in, and you can see this market pulse. Like I said, we'll go over that. That was kind of telling you this was all going to happen. So they started buying it like crazy here. You can see this thing, this market pulse, and then triggered the stops. Now sell it. So this is actually a double whammy setup. We'll come back over here. This is the dumb money. I call the retail trader the dumb money. Don't be offended. I'm a retail trader nowadays too. But that is the dumb money puke. Guys getting out into the waiting hands of the big money, the sell-eyes. That is in a distinct setup called the double whammy. Has a high percentage of failing. All right, so we'll come back over here. We'll look at the ISI zones and everything else there too. But as far as this is concerned, let's get these levels put in here, and we can trade this zone in ES. Like I said, I know all you ES rats that just love to stare at this crappy market. You guys are doing yourself a disservice not watching other markets. And I'll show you my pain that I'm usually catching. My pain from this morning. Because the point is, these volume events, real volume is consistent across all these futures markets. So it doesn't matter what markets you're trading. It's the same patterns in all these markets as long as you know the thresholds of the market you're trading, right? So you're doing yourself a disservice staring at one market when you could be trading, like for instance, we're here in natural gas fire off. I can just hop over there. That's corn. I'm not trading corn right now, but that's like watching paint dry. But you get the point, right? You're doing yourself a disservice if you're just staring at ES and NQ, right? Because especially the last 2 months when it's just been an absolute chop fest, get your head chopped off. And the problem is there's so many guys trying to do this for a living, and they're like forcing trades in bad markets. Well, you can just say, you know what, ES, I'm not trading you today. This is just a chop fest. Oh wait, natural gas is firing out. Oh wait, soybeans is firing out. Speaking of which, let me just show you this so I can get this paint out of the way. So I'm sitting here doing my prep, so I draw all these inflection zones for my trade room in the morning. That's just quickly. I like to show this because you get a lot out of my trade room. I mean, I'm obviously giving it a pump, but it's the truth, right? So it's like you come in here and I post these zones every morning. These are the inflection zones. You can do these yourself. I do this for 17 different markets. For every one of these markets, I post these zones. So anyway, I'm sitting there drawing the zones. I hear soybeans fire off. Well, soybeans usually a slow mover, so I'm like, okay, I got some time. And I had a feeling, I remember looking at it, but I didn't know for sure if we were at IZZY zones. So remember, I tell you, my inflection zones I take aggressively, right? So I should have known we were in an IZZY on the open.
S&P stop. Yeah.
All right, more stops there. We'll head in there in a second. So the thing fires off. I didn't remember. I forgot to really look at soybeans to see where we were. I'm like, I'll go there in a second to draw this zone. And remember, this is supposed to be an aggressive entry, so I'm not waiting for a retest. I get over here. I draw the zone. I start drawing the zone. I'm like, or I drew the zone, and I went back, and I looked at something. I came back, and I was supposed to put my order in aggressively. I would have been in right here. And I looked at this thing, and I'm like, you've got to be. I mean, look at this move off of that. So this was a broken ice setup. This is an example where the big money was wrong. I should have been in there. Only 20-cent move. Like in minutes. This just never happens in soybeans, and I'm just sitting here holding the bag with nothing in it because I wasn't aware where we were pre-market, like doing my pre-market prep, and I missed this whopper trade. And this is the most recent setup, but I'm mad at soybeans, so I'm not looking at that right now. All right, so so I was going to trade this original setup. And guys, I know I talk fast, but you got to remember, I'm trying to cover all these markets, trade live, go over all the stuff I'm looking at, so I can't talk slow. You know, what you can do is you can go back and watch the webinar replays. And then in my room, I have over 500 webinar replays from the last 2 years of doing these webinars. So if I'm talking too fast for you, I apologize, but I got to get it all out, and I have a limited time to do it, right? Especially when I'm trying to put on trades. So I'm sorry if you can't follow, but you can go back and watch the replays if you're kind of at a loss right now. All right, so that started right about then. Actually, it was over here. So these were 81, but it started over here. So I'm going to move that down a little bit. Answer some questions so I can catch my breath. All right, so this is your new stop run zone. So I don't think we're at the IZZY yet. I'm dying to put on an IZZY. A little closer, 4201. Now these are zones. They're not exact prices, but this is the zone right around 4200, 4217. Anywhere in the zone, if I get a volume set up, I'm going to take the inflection zone trade, the IZZY, aggressively. We're not there yet. So there's no aggressive trade here yet. So now what I'm going to do is I'm going to plug these values in my spreadsheet, 92.50 to 91.25. And ATR. That's if you're an ATR, again, 5-minute ATR. Wow, there's right there in the middle of the screen. It means it's rotating about 4 points every 5 minutes. So what can I do here? Well, this is not going to be an aggressive trade either way for me, meaning first move out of the zone, first ATR move, so I will wait for retest failure. But whatever way this shows me, remember, we've talked about this already, I determine which way I'm going to trade this, and if it's able to get an ATR out of this zone. Right? So if it gets an ATR out of the zone, then I wait for a retest failure, I'll go long. An ATR retest failure, I'll go short. I do this on purpose, and I know there's traders saying, well, if you get the ATR and you come back to the zone, why don't you go long right there? Why do you have to wait and cost yourself another 4 points? Because again, I've learned the hard way of doing that and getting, oh, you know what, I don't need to wait for that to pop back up. This already showed me the ATR there, I'm going long, and then it does that. We already saw that happen in NASDAQ and Q the other way, right? So if I would have traded that on this one, if I would have been all aggressive, that was this event here. This is right when we got on. So this did get an ATR right off the bat. That was that stop run. Move down. If I said, oh, you know what? I don't need to wait for that to come back. I'm going to go short right here. What would happen? I got my head ripped off. So that's the reason I wait for that. And by the way, there's Fed chirping too. So this is why the markets are actually ripping higher, because they come out and they pump it up. So they do good cop, bad cop, right? So these speakers, I call them different names when we're in my private trade room, but I won't do that publicly right now. They come out. You can see here, like this is today. This is part of my trade room as well. You get it. You can see all this stuff, but all these dudes were talking today, right? And so they do good cop, bad cop. So it's like they come out and they say something and the market rips. He says something, the market rips. He says something, that's all it's done today, right? Then Powell comes out when they do the actual minutes from the rate, and then he'll throw the hawkish view or the bearish view, and then all it does is basically, so they basically avoided, they pump it up, and then when he comes out and says something hawkish, it just comes back to where it was. Instead of, they don't say anything and it's sitting here, then he says something hawkish and it's down here. I've seen this game so many times, it's just ridiculous. It's good cop, bad cop. If you don't believe me, watch for yourself. Pay attention to it, and you'll see exactly what I'm talking about. So you think this is hawkish or dovish? Look at that. Since they've been talking, the thing has just gone up straight 30 points. So this is what you got to deal with, guys. And so that's what I tell my room every day too. You know, when these guys are talking, you got these algos that are going off their keywords, right? So the minute they say something, they don't. It's not like they wait. They see a bullish word or a dovish word, they buy. They see a hawkish word or a bearish word, they sell. So for instance, the other day we were in the trade room, and I was trading while they were talking, and some guy said, "Cooling, something's cooling, but it's not yet cold." But the market, the algos read it as cool and cold, and the market did this. It dropped like 10 points in a second, right? So that's what you're risking if you're going to trade while these guys are talking. The problem is, the last few days, all they have been doing is talking. So it's either you don't trade or you do trade and you accept the risk, right? So that's what you got. That's what you have to understand if you're trading when they're talking. I can have the best trade on. I'm going to put on the best trade here. It looks perfect. We're at a great resistance area. Blah blah blah. They say one thing that's bullish. The thing will rip off the page. So that's what you got to decide, and you got to know when they're talking, right? That's just. So I'm using, this is Financial Juice. It's the best one that I've seen. You know, all this stuff is on my website too. I don't think I have the Financial Juice, but actually it is. If you go to Tick Strike, so on my website, I would show this to you guys because I always get questions. So go here. Everything I'm using is on here on the homepage of my website, right? Bookmap, you get discounts. Apex, we'll go over that. Discounts. Use Pulcini 50 as your coupon code and you get their 80% off they're doing now. Spot Gamma, you don't get discounts to that, but you get discounts to the Hero Indicator. That's another thing we'll talk about. You get a extra week with this code. Tick Strike, if you click on here, this is the same guy that runs. Actually, I don't even have that running right now. Let me get that going. Very important too. But this is the same guy that runs the Financial Juice. So I got to put that banner on my website too. I just forgot to do it. But anyway, and then there's the Tick Strike, and then Trader Sync. This is what I use to track my trades. Everybody should be using. This is the problem I was having with Tick Strike or Trader Sync, but everyone should be using this type of charting or tracking software. This is the best one I've seen. Everything I'm using, guys, is the best I've seen. Right? I don't promote something if I'm not using it, right? And it's not the best I've seen. In my, I have a lot of experience, so I've seen it all. If I'm using it, you may want to pay attention to it and try it out. So, all right, so I think I already put this in here. All right, so now we're just waiting to see which way. So how I'm going to determine, I got to keep on top of this ATR until I get a trade. It's down to 4.07. So how I determine whether this is a bullish event or bearish event, look at my validation price. So if this market can get up to 96.50, I will trade it as a bullish event. If it gets down to 87.25, I'll trade it as a bearish event. And then the other side can't touch first, meaning, so 87.25, which it looks like it's going to do, that would be a bearish event. But if the market ripped up to the 96.50 first, it wouldn't be bearish after that. I can only take longs. See what I'm saying? So we don't know what this is. It's just hovering in the zone. We'll go over it as this happens. but it looks like this is going to be bearish. Am I shorting aggressively here? No, because there's no inflection zone. There's only a couple of reasons why. And slugs, the red lug or the blue lug, those are where I trade aggressively, where I don't wait for retest of the zone. But this is not none of those, right? So here, if we're not near the red lug, that's not aggressive. I don't trade the VWAP standard deviations on their own as aggressive. I pay attention to them if I'm getting out of trades. But the point is, if I'm going to go short the setup, I need the conservative entry. What's the conservative entry? ATR, which we said was that 87 quarter retest failure. And then I'll go short. And all those prices are in the spreadsheet, and we'll watch that occur basically right now. So we're watching that. I am long crude. It's really doing nothing. I got in this pre-market. I actually put on the wrong month to start. So you want to roll, if you're in crude, you want to roll to July, but I put on the June on accident. But this was this volume event here. Oops, I'm going to turn this off. That was the stop run. And this was actually an Izzy trade. We'll go over that, but I should be long the BARF too. ATR retest failure. But I got long the minute it broke out of here. And again, to my inflection zones. That was into this zone here. This zone was from a while ago. A lot of stuff happened in this zone. Gap up, directional conviction, move down, directional conviction, selling tail, and then where it's launched from yesterday. So, and this is also the top of this balance area for crude, right? So many times the markets break out. Here we go with the alerts. I don't know where the alerts are. When markets break out, they'll retest the top of the balance, then they'll go. They'll sometimes even come to the high volume node, then they'll go. If it violates the high volume node, then that's a failed breakout, and those are some of the best paid traders, like short trades or long trades on a failed breakout. Anyway, I took this trade. I had the volume event in an important zone, so I didn't wait to get long. I just got long. I didn't wait for one of these. I got long the minute it broke out of there. But there's other setups now that I can put on that I haven't even put on. The BARF is obviously in play, and you can see this keeps coming back to this volume event. It's not coincidence, right? And I already did it here once. Now here's another one. If this comes back out of here, I could put the BARF long on too. But this is feeling like this is going to rip through this zone here, especially with this liquidity below here. So we'll keep an eye on that. But I am long that, and I'm long in July. I put on June, I got out of that, and I'm long in July. I got in at like 27. So it's really doing nothing right now. We'll come back to that. All right, so this is an official bearish setup, most recent. Let me change these colors just so it's not confusing. Brucey, if you got any questions, let me know. This is kind of slowing down a little bit. Talking nonstop for 45 minutes.
No questions so far.
No questions. Wow. Haven't really done much, but all right. So, like I said, we had our price that was going to make this a bearish setup. There's my. That was 87 quarter. So it's clearly got down to 87 quarter. It's actually back in this prior zone now. So where we were for the way I trade for my areas, this was not an aggressive short. I may miss this trade. I may not come back. Very likely it'll come back. From my estimations from watching so many of these, it's about 70% of the time it comes back to the zone. What we don't know is it could go 4 ATRs before it comes back to the zone, right? It's usually 1 or 2. That's why we take advantage of that trade. But what I'm saying is I may miss this trade, but I'm okay with that because this is not in an area that I wanted to be aggressively short. If it does this, then it does this, I will short it. And that's the conservative entry, and that's the BARF trade. And that is just a pure BARF, blind ATR retest fail. Actually, I have this backwards, but so that is just what I'm trying to show my room, and I've done this before. I did it December of 2021. I did it the entire month, showing this alone is an edge. The volume events on their own are edges without anything else. If you just traded these in a vacuum without looking at a chart, all you look at is the volume events. If you trade these, wait for ATR retest failure, that alone is an edge, right? And you put your stop on the other side and ATR on the other side of the zone, right? So I'm going to prove that to my room, which I already am, and they're the bars across the board, like this one's down a little bit, but this one's about even, this one's up big, this one's doing well too. So as a whole, the barf trade is an edge by itself. So you can imagine if you get the volume event in important areas, then it's even better of an edge, right? This is like the market profile, those highs and lows I was talking about. These are the Ludwig levels. This is actually trading to the liquidity. These are the Izzy zones. So you can imagine if this is an edge on its own, that makes these even stronger, right? So that's what I'm showing, and that's why we're doing these on independent accounts. I know. So here we go. This is the routine, guys. I mean, I'm telling you, this is, it's just, we laugh at it all day long because it happens in every market. These algos just bring the market back. So here's an example of the ATR trade, the reversion trade that I'm not doing on these webinars. I can't even do them on my room webinars because I can't keep up with them. But if I took the ATR long, the one ATR long would have been at 87.50. So just again to give you a visual. Move this out. Actually, I can't do that, but I can. All right, so one ATR would, meaning when this moves to 87.50, I'm taking a long, my stop would have been 82.75. Obviously didn't get stopped out, and all I'm playing for as a retest of the zone, I'm out 90.75. That's the trade, right? The 2 ATR, you would have been filled, I don't know if you would have been filled 84. Yep, look at that, right? Well, that's weird. I wonder why we have these prices in here. 84, the exact price, 2 ATR, you get in at 84, you risk to 79, you're out at 90.75. Because the reason this trade was born was actually, I haven't gone on this rant yet, I was showing my room. I did this for my room, and that is a requirement. If you come to my room, you have to have this tattooed to your forehead. You have to get this tattooed to your forehead, a real tattoo. This is directly, that's a joke. This is directly from trading in the zone, right? And we'll go over this. I'll go on a rant on this today at some point. But the point is, we did the exercise. This is directly from his book, Mark Douglas, Trading the Zone. We did this exercise. I decided to do it because I kept, if you've been watching my webinars for the last 4 years.
Soybean iceberg buys ES.
Oh, my buddy soybeans.
153 contract.
If you've been watching my webinars for the last 4 years, all I've ever said was it's on these markets retest the volume events at least 70% of the time, from my estimations, right? My opinion, from watching so many of these. Then I said, you know what? Why am I not taking advantage of that retest of the volume event and just for like more of a scalp type trade? So then we decided, okay, this is going to be our exercise. This is directly from his book. Pick any market that's liquid. You can put on 3. Find the variables, right? So the variables are size setups, ATR. And then you follow these steps. So then we figured out the computation, and that's what the spreadsheet is doing for the retest of these zones. And that's how that trade was born. It was lit, and you could do that with anything you think is an edge. Do this exercise. Get the book, do the exercise, do it for about, at least a couple months, at least a month. You want to probably do a couple months and figure out if there's an edge there. If there is, that's all that is one of these. Right? It's one of these. These are all different trading strategies, aka playbooks. There's the reversion trade. Right? Because that's how you become profitable traders and consistent traders. You need rules, you need playbooks, you need rules, you need to know you have an edge, and then you trade off of it, and you just keep putting them on. It doesn't matter, how you're feeling, if it feels bad to you, if it feels good to you, and so on and so forth. If you get your variables, you put the trade on. Here we go with the rant. That is where he starts this whole thing. He talks about being trading like a casino. Learn to trade an edge like a casino. The purpose of this exercise is to convince yourself that trading is just a simple game of probabilities. At the micro level, the outcomes to individual edges, let me use my drawer instead, are independent occurrences and random. At the macro level, the outcomes over a series of trades will produce consistent results. You can be the casino if you have an edge, SI indicator, that genuinely helps put the odds of success in your favor. You can think about trading in the appropriate manner. This is what traders cannot do for some reason. That's why 95% of them fail. They cannot just accept. It's like you're like a casino and you're dealing the hands to the players. You know mathematically, over the owners of casinos know in a year's time they will be profitable, right? Because the math just says they're going to be profitable. The math is their edge based on how the game rules are set up, right? Our edge, my edge, is the SI indicators. I know over a large series of trades, I will be profitable. So, when they're dealing blackjack, they come in and they have a whale wax them for $1,000,000. Do they shut down operations, close the casino, say, I'm done, I'm never doing this again? Do they start changing the rules of blackjack, the overall rules? Like, okay, well, let's try this today. Let's make the bust amount 24, or let's make it 18 today. Like, that doesn't happen, right? They don't change rules. And that's what you guys are doing when you are, say you get off these webinars, you're like, oh, I love that idea, ATR test failure. The next 3 trades are losers. You're like, oh, screw that. I almost swore, sorry. Screw that. This stuff doesn't work. Well, that's just like a casino shutting down after they get waxed one night at by their players. If you know you have an edge, you just keep putting them on, and eventually your P&L does that. If you have an edge. And I know this is an edge because I've been using it. That's why you guys want to pay attention to what I'm doing. Then you can tailor it however you want to tailor it. But there is no stronger edge, and I will put it up against anything out there, any indicator, any nonsense you guys are seeing on the internet, against anything. At any time, I'll even have trading competitions with anybody out there that wants to do it for a longer period of time. I'm talking about I'm doing air quotes, the gurus. And not because I'm some, I'm a good trader, but I'm a good trader because of the information that I have. You see the difference? Like, I was telling my room the other day, like, I used to be completely gut trade. That's how I made millions of dollars in the past, just by watching this, and I have very fast processing skills, right? And I would judge, aka gut, which way to trade. Well, this doesn't work anymore. My gut feeling now is probably 20% right, literally, and I'm not kidding you. So that's why I was telling my room the other day. I'm like, I was right on this one. I think it was Thursday. I said, this market feels like it's going to get killed. But then I warned him, my gut's usually wrong. That's why I have trading strategies with rules, so I don't have to rely on gut. I just take the trade as it presents itself, aka casino. If you guys can grasp that, you can make it as a traders and do this for a living. All right, no questions. I can't even take a break here, huh? No one's liking my rants or anything.
There's a question or a comment in here. You're confident is why I watch you. Laughing out loud.
Right,
And
right, but why am I confident? I don't mean to interrupt you, but why am I confident? Am I confident because I was $1 million trader? Well, that's in the past, right? This game is what have you done for me lately? Yeah, I was a profitable trader. I've seen a lot of market action, but does that pay my bills now? No, right? So when I tell you guys I was $1 million trader, so on and so forth, I'm not standing behind a Lamborghini bragging. I'm telling you the reason I tell you that is, one, you might want to listen to my view of the markets, right? But more importantly for you guys, it should give you guys the confidence that I went from $1 million trader. I made $15 million in 3 years trading for my trading firm, right? Then all of a sudden I couldn't make $1 trading. The scalping game disappeared. The low volatility and the algos, it was done, over, right? Well, did I just quit? No, traders, they don't quit. They're like, I'll find another way. Well, guess what? I spent 7 years trying to find another way. And guess what? When you have a way of living and the income's not coming in, this is what happens to your net worth, right? So I went from that multimillionaire to that zero error, right? That's a word, right? So this should give you confidence. So I was out of the game. You guys all know my story. I tell it a little more on these pro trader webinars because there's new traders here and they like to hear these stories because it can, I'm telling you. So when I started, I was trading one lots, right? One lots. That's how I started. I built it up and made 15 million bucks. That I obviously found an edge. That disappeared and went back to zero. Then I literally spent 7 years trying to reinvent my style. This is before Bookmap. From 2007 to 2013, 14, I tried, I'm just like you guys, right? Or some of you guys. Let's try this indicator. Let's try this. Let's try this. And I was at best average. I couldn't make a living on it. I had to leave the business 2013, late 2013. I had to get into medical sales with my buddy. And I had to go sit in doctor's offices and kiss ass all day long making sales because I had to support my family, right? Fast forward 4 more years. I was always watching the markets, but I wasn't trading consistently because I had to be in doctor's offices. Dr. Brett Steenbarger. This man right here, probably the most well-known trading psychologist on the planet. He sat behind me when I did make my millions, and he wanted to know how I made my millions, what made me tick. The book isn't all about me; it's about what makes elite performers elite, right? So he wanted to see what I did. Sat by me for a year. I'm throughout this book and the entire afterword if you want to read my whole story, right? And this is when things were going great, by the way. So he calls me and says, hey, you may want to take a look at this new software that I saw. It's called Bookmap. He's like, this reminds me, because remember, he sat behind me for a full year. This reminds me of how you used to trade, how you used to view the order flow. Oh, by the way, shocker, shocker, here's the retest of the zone. You took the 1 ATR winner, 2 ATR winner. You're out. We didn't put that on here. I'm just giving you an example of what we're doing in my room. So now, by the way, this is set up. I'll go back into my story here in a second. Now I could take this short if it comes back. So let's look at our short price. Make sure this ATR is accurate before I get filled. That is 4.34 now. And now I can short as it comes back. Remember, I was waiting for ATR retest failure, 86.25. So the one thing I will adjust here, because I just know how powerful these volume events are. I don't know if I've been mentioning it in this webinar. You can see how this held this one. I will not enter that short in the middle of this zone. I'm going to sacrifice a few more points and get it out of the zone. So I'm going to short 84 instead of 86.25. I don't do that usually. I usually follow the exact prices. But if it's in a prior zone, do yourself a favor and get it out of the zone before you enter, right? So I'm going to put that order in while we talk. Again, I'm not showing my click trades. Not clicking on the order dome. I'm telling you exactly what I'm doing though. So and it's all on this spreadsheet. You'll hear if I get filled. I could put on 9 micros based on this account size. I'm only risking $500 based on, and remember, don't be risking 10% on your real account. But for these Apex accounts, I'm being more aggressive. I could put on 9 and I'm getting shorted. Not 86.25, I'm moving it down a little bit. I'm gonna get shorted 84 so I get out of that zone. That is going to be the BARF setup. Trading setup, one of the 7 setups we're using. I think it's 7. If it comes back. If it doesn't come back, then I'm not short, right? But this is a perfect example of me not just jumping back in like we talked about earlier. Well, if you want to be short, why don't you just get short when it comes back? Because it could just blow right through. Or if it does this, I know it has a much higher percentage of going down, right? All right, so that order is working. So back to my story. So then fast forward, Dr. Brett, 2017, calls me, says, check out this Bookmap software. It reminds me of how you used to view the market. Start looking at it. The minute I looked at this, I knew I was back. The minute I saw it, and this was even before this, it was just this. I'm like, oh my God, I just, with the bubbles and the liquidity, and I just watched it for a few days. I'm like, I'm back. This is it. So then I started trading it, and actually, when I got back into business, I was going to just trade stocks because I was so jaded from being a multimillionaire trading ES, and I just didn't even want to look at futures anymore. So I started trading stocks. So I was trading stocks with great success, just using the liquidity and the bubbles and some basic things like market profile like we've been looking at today. Then Bruce, for 4 months, kept talking about this SI indicator and the CME MBO data. Again, you can Google all this stuff yourself. Go here quickly because people sometimes don't understand what I'm talking about. CME MBO data. Google it. Right? Tell you all about the difference of this new data. It's not new anymore. It's been around for 7 years now. Before, you would just get market by price data. Right? And that would just show you. So whatever software you're using right now, if you do not have a rhythmic feed, I think there might be one more that just came out recently, but if you don't have a rhythmic feed, these orders that you're seeing outside 10 levels are all fake. It's not real. They're in there, but it's not real size. The liquidity is not real. With the MBO data, you can see unlimited.
S&P stocks stopped by ES 516 contracts.
By the way, this is why I didn't take short aggressively. Right through it. So here's no volume. So anyway, we'll get into the MBO data. Let's draw this first. I'm jumping from topic to topic, but it's enhanced. It shows with 100% certainty that if you can read the data like the Bookmap developers have, they're geniuses, right? The stop runs and the icebergs. So we know exactly what's going on with the retail trader with the big money. And then when I saw this, I said, this is unbelievable. I watched it for like a few weeks. And then that's when I came up with my course. That's on my website and the Bookmap Marketplace. again, I always show this stuff just because I get questions. If you go here, go to my store. So this is my course. This is what I'm talking about. I got a new one coming out. One of these days it'll be done, but this is still very relevant. It talks about the thresholds and the setups and everything else. These other ones, this is the one I did when I was trading stocks. This is like a distinct setup, like we're looking at a playbook today for stocks. These two were done by my former partner. They're very good, but I don't trade these methods, but they're still very good. I get a lot of good reviews on these two. Of the intricacies of trading like the NQ, but you can combine that with this knowledge and you're even more powerful. But anyway, that's where you get my course, and you can get it on Bookmap Marketplace. Just quickly too, because there's new people on here. So if you want all this information, this is how you have to go about it. I go through this with all the time, like with people I'm mentoring. So you got to get Bookmap. Get Bookmap on my site, you get the discount. Then you need to get the MBO bundle. That's this. This is what the SI indicator is driven. This is the SI indicator. You need to get this. It's 134 bucks a month. And before you guys start bitching, oh my God, there's more. I can't take all these expenses. Guys, I am all for cutting expenses, but there are certain things that you need to spend the money on if you want to be successful. And the SI, I don't know if I mentioned it, is the most powerful thing I've ever seen. You need to fork over the cash for that thing. If you're not, you just don't. You can trade without it. Absolutely, you can trade with nothing. You can trade blindly if you want, but if you want all the information, I don't care how good of a trader you are. If you're not using this information, you don't have all the information. But end of story. You just don't, right? And you're doing yourself a disservice. And you'd be doing if you're a profitable trader now, you get this information, you're going to go off the charts, in my opinion. I'll come back to that in a second. Let's draw this on real quick. Obviously, this looks like a long setup already. 95.50 to 95. Let's put this in, and you can see they're buying the bejesus out of these stocks again. Everything's okay with the world till the next bank default, and the market will sell off and then bounce right back. 95.50 to 95. Or you need to get that stuff. APR is up to 4.53. All right, so no average on. So it's a bullish setup. It needs to touch 4,200. It has not got there yet. So the meaning the bearish play is, or the sell is still in play, potential sell. But if this touches 4,200, the only thing that is valid is the bullish setup. I do know, let's see, is this Izzy? Real close. Not quite here yet. I'm hoping we get one more move up into that 4,200 and get a stop run into this zone, and I will short that aggressively with glee. And on top of it, guys, I mean, look where we're at here. Like, this is so extended. Like, granted, you need some sellers. I don't know where the hell the sellers are, but this gets up here, inflection zone. You're real close. This would even be better if we can get up here to a lug. Then we have the slug. That's an aggressive short. That's that. Stop run at major lugs. Whoops, didn't want to do that. Then we have Izzy, and there might be a barf. There's a lot of stuff. There might be a dada here. We'll go over dada if that comes up, but these are all different trades.
Stock LCL, 151 contracts.
All right, I'll go over to crude in a second because I got to trail my stop to that new setup. That's how I trail my stops. I don't trail my stops based on what I don't want to get back. I trail my stops based on what's happening in the market. But anyway, I'm hoping this gets one more wave up of stops. But as of right now, this is not a bullish setup anyway. I can still short this if it presents itself. So quickly, let's just get through this basic stuff. You need to get this. Then you need to get only data feed. Again, there may have been one more. I'm not sure. Bruce knows better. They may have added one. Maybe it's this right here. I don't know. But Rhythmic is the only data feed that has the MBO data that we went over. So this is what powers the Bookmap MBO, the SI indicator. So if you get this is what you have to determine what you want. So if you just trade ES and NQ, which, like I said, you're doing yourself a disservice, but all you need is CME, 39 bucks a month. If you want to trade these other things, which I highly recommend, so you can be on taking advantage, like we saw with that soybean trade I missed, the crude trade I've been in, soybean is CBOT, gold, then you wouldn't get these individually, you would just get the bundle. That costs you.
Iceberg by YM, 100 to contract.
That costs you 99 bucks, and you get all the so these CME is the main exchange, but these are the this is the umbrella of the CME, and you got to pay extra. Of course, they find a way to charge you more, but that's what that is, right? So that's what you need to have this information. Yes, it's an expense. It's the best expense that you're going to have in trading. What I cut corners on are the stuff that can be cut corners on, like this charting. That's why I use Thinkorswim. It's free. You put money in the account, and you have access to this. Even if you pull your money out or lose your money, you still have access to the charting. Don't pay if you're paying for charting. You're throwing away money. Like I said, I used to pay $800 a month for CQG. Like, what was I doing? I mean, between that and TT, I was paying $2,000 a month. Those are the kind of things. For instance, like, do I need TT nowadays? No, I could trade right off this dome if I want to, or the rhythmic domes. Point is, cut corners where you can cut corners. Don't cut corners in the most important information you can possibly using in your trading. Possibly be using in your trading. All right, what was I getting at there? Oh, let's go over to crude here real quick. So remember, I was long. Here's a new setup. So not only can I trail my stop to this new setup, I can trade off of this new setup. So you had, well, you know what? That was in June. Unfortunately, that sucks. Because I'm trading July. There's still volume events firing off. It was a threshold, barely threshold, but you can see. Look at the difference in the volume here. You don't want to be trading. You don't. Some brokers won't even let you trade June right now. You can see here, most of the volume here is in at 131,000 versus 36,000. So I'm not going to draw that zone. I need to see something in July. As a matter of fact, I'm going to close that, and I'm not even going to listen to those alerts anymore. So I'm still long crude, but nothing to trail my stop off of yet. Hold on one second. Let me X out of that. So when you close out the screen, you got to come up to the main page and get rid of it too. So I come here and now I'm going to get rid of that, and it says, "You want to unsubscribe?" Yes, I do. This is my sweet saving trade that I missed. All right, sorry, Bruce. Did I interrupt you? Were you asking a question before?
There's a couple of questions.
Okay.
First off, someone wants to know if you also sold a medical device to Brett Steenbarger.
Why would I sell it to Brett? Because he's Dr. Brett?
Because he's a doctor.
No, actually, what I was selling was genetic testing.
I'm just kidding. So I made that up. No one asked that.
So you're not in the game anymore, Bruce. You're not even funny anymore. You used to be funny. You got to get back on these webinars.
I'm out of training. That's right.
Or I'm not sharp enough to catch a joke. One of the two.
No, there's a question here from Sozo. I'm a new trader, study many techniques. I do not use ATR. Why do you incorporate ATR versus other techniques like fib, auction market theory, support and resistance, etc.?
Well, I do use auction market theory. I use market profile. I do use support and resistance for like the levels in these volume events, but this are the inflection zones. But this doesn't tell me the current volatility of the market. ATR is telling you how volatile the market is right now. That is really, really, really important. That is the second most important thing you can be using besides the volume events. Volume events are the real-time volume that's happening right now in these markets. This is telling you how volatile the market is. So this is what I'm trying to get through to you guys. If you are using static stops, right now it's not too crazy. So if you're using 2 point, I can tell you probably half the people on this webinar, whatever they're trading, they have these static. I risk 2 points to make 6 in ES. Okay, great. Right? That's a great risk return. But what is 2 points? That's something important to you. That is not important to the market. This is what's important to the market. This is what you have to adapt to, not that. The market doesn't care what you want to risk. The market cares about the current volatility. So you need to be risking based on the current volatility. There's times where this, like last week or the Fed, this was at 13. You're gonna risk 2 points in a 13 ATR market. Good luck. You are almost certainly going to be stopped out just on the random rotations that are 13 points wide. You're risking 2. Yeah, bye. It's not going to happen. You may get lucky once or twice, but over your trading life, you're not going to make it. I can tell you that. So I use ATR to judge how volatile the market is. Right. So for instance, let's see what natural gas did on the number. Right? So look at this. So natural gas before this number, now look at the ATR on the bottom left there. It was about, so there's different decimals here, but that was basically saying it was rotating about 12 ticks every 5 minutes, right? It was 0.0122, it's 12 ticks. Now look after the number. Went up to 19, kind of dissipated again here. But it's almost double. Not double, but yeah, almost double. So it was 12 and it's 19. It's almost 24. So I wouldn't be risking, even if I had a static 10 ticks that I'd like to risk. Well, now you're at almost 20 ticks because of the volatility. You don't want to you're adjusting to what the market is telling you to do, not what you want to do. That's the key.
Stocks LYM 112 contract.
All right, I don't think I'm going to look at Dow, but we got this going on. So this is now attempting to be another bearish setup. I was really hoping we get one more stop run into those zones up there. I really, really wanted to short aggressively. I could still short this, but it has to be ATR retest like I was waiting for on the first event. So this is 4.39 now. So this market needs to touch 90.50 to make this a bearish event. Right? And then I wait. This is not an aggressive area for me yet. One more move up, then I would be getting short the minute it broke out of the zone. Right now, I'm waiting for 90.50, which is the ATR, a retest, a failure. And then I get in just outside of an ATR, which is 90, right? So I force the market to push outside of an ATR. I've learned this the hard way too. So I used to wait. I wait for an ATR retest, and I get in at like 50% of an ATR. Then I lose 60, lose 80, lose 90. Then I finally figured out, okay, the best way to do this is if the market can push outside of the Algoville ATR snapbacks, then it's got enough energy to keep going. See what I'm saying? That's why I force it to get just outside of an ATR for my entry. And I've learned this the hard way too. That's what I'm trying to explain to you guys. Everything that I'm teaching you are lessons you don't have to learn the hard way. You can just plug and play, right? Get in my room, watch my webinars. I do this exact type of webinar twice a day, every day. Exactly what I'm doing now. It's not as basic, some of the stuff we've been talking about, but I go over this every day, and then you learn. And then you can look at my webinar replays and learn. You get the Bookmap data feeds as part of all my data feeds I have for 2.5 years, meaning you can go back, you can replay the day in the Bookmap. So this is what this looks like. Actually, this has been sitting here for a couple of days because I was replaying a day. Let's see if this is still alive here. So this is me replaying a day. So you go in here. By the way, could you see all my prices on here when I'm showing my charts, Bruce? I forgot to even ask.
I mean, I'm seeing Bookmap right now.
Yeah, could you see the prices on the right though?
No.
You can't see my
no,
prices?
I can see 41.95.
Oh, okay, because last week on this monitor it was cut off. I'm glad it took me an hour to ask that, but okay, it doesn't matter. At least you can see them. So sorry, that just hit me that you may not be able to see them. So anyway, you just literally come in here. When you start Bookmap up, it'll say trading mode, replay mode. You click replay mode. You come in here, open data file, and you can see I can take any of these days and replay the day. So this is how you get good and proficient at trading these markets, right? So it's just like anything else. You say it every day. You're going against the brightest minds on the planet. If you think you can just sit down, that's one of the dangers of trading, right? Someone could sit down and just put on a lucky trade and get a winner. Get a winner. Like for today, just buy every time. Just keeps going up. Well, obviously everyone knows that's not going to last, right? You need to work on your trading. You don't step into a professional basketball game and think you're going to compete, or step up to the plate and think you're going to hit a 95-mile-an-hour fastball if you've never practiced. Practice. You're talking about practice, not a game. Practice. That's Allen Iverson, by the way. This is what I do all day long. This keeps me sane, making jokes like that. But anyway, you need to work on your trading. You can get this information, replay the day, stop it, draw your zones, say, okay, I get long here. You can actually put on trades, like they're not real, obviously, but you put them on to keep track of your P&L. This is incredible information. Anyway, I've got 2.5 years of that data. So you get in there and you replay the days and you practice. I'm talking about practice, not a game. I forgot why I got on that rant. All right, so we still need to get down to 90. Let's look at the relative, since we're on the screen, what the relative volume looks like. So this actually isn't too bad, especially for lately. You can see here this thing's been at least better than normal. That's the 100% that's normal, so it's been decent. So there's probably more moves coming. Not quite that kind of volume. Nasdaq's pretty dead. That's why we haven't heard any volume events in there. But you can see when it's like this, or under 100%, and then you get chopped. When it starts ripping up, then you get extended moves, because that means the big money's coming in. All right, so what do we need to see here? 90.50, I believe, to make this a short setup. Yeah, 90.50. So the ATR trade, when we were talking about that to play for the snap back to the zone, the one ATR would have been a 91 entry. You wouldn't have been that long that yet either. But anyway, I'm waiting for a retest failure of this zone to go short. And actually, I had a short working earlier. I got to cancel that, which I always forget to do because that never materialized. But now I'm going to go short this. Here comes the retest. I didn't quite get an ATR on this one, but I need to see. So even if this did a retest failure, I still can't go short. I need to see the full ATR, then a retest, then a failure. So now I just got to sit here and wait and be tortured. What other questions, Bruce?
Let's take a look.
Look at Dow. Why not? Just to show you guys it does not matter what you're trading as long as you know the thresholds of these markets. Oh, I want to show you a little bit of market pulse too before we get off the webinar. So this was the stop run we heard a little bit ago. So the threshold in Dow YM is 100, meaning I will draw zones and trade off anything over 100. So once again, take your bubbles off, find where the price spiked, incorporate the prices in that spike.
Question on Deborah's asking about first off about the spreadsheet template. That's part of Scott's trading room. If you want that, he'll give you access. If you are in his room, I'll put the link in again here. You can scroll up and see the link.
So yes, and here's my room, right? Just come to my website again, like I've been showing you guys. Just go in here and here's your options. And you get discounts off my courses too, depending on which one you know. Here's the monthly, quarterly, yearly. And then you get discounts to my mentoring and my courses if you decide to get the courses. And if you're in my room when I release it, say you buy the original course, which is still very, very, guys are still buying it right now and it's still very relevant. If you're an active member of my trade room and you have the old course, you'll get the new course for free when I release it. It should be, I'm going to have it done in the next couple of weeks. I have to.
Deborah's asking why you're waiting for 41.90 and a half. Could it be? Couldn't that be a rotation?
It's a rotation. So the way I've learned how to trade these markets, how to trade these areas, that is the price point. That is exactly one ATR away. So if you look at what prices. 90.50 would be about a 4-point move, right? What's the ATR? ATR is 4 points. So the way I determine how I'm going to trade this setup is I force the market to get an ATR out of that area. And that shows me it's got the strength to at least push an ATR. That's a bearish setup. The same with the bullish side. So this is just how I have learned from trading so many of these. I mean, and I'm talking thousands and thousands and thousands.
152 contract.
Got to look at that guess too. That's how I've determined the best way. I used to be, when this first came out, I'd be like, okay, here's a setup. Okay, as soon as it breaks out of the zone, I'm going to go short, right? And that's part of the original course. That's the one thing that's not current, because you've got to update your stuff. Like you've got to, I can't think of the word, but you have to, starts with an R, can't remember the word. Adapt. You have to adapt, right? You're always not always. I'm not just changing things, but I'm ready to adapt to, if something's not working. So I would just say I want to get short. I would get short the minute it broke out of the zone. I put my stop level there. That could still work, and it's really good risk reward. But I just learned the best ways to determine what these are, because you don't really know what they are until they can push out of here. And for me, that's the ATR. If it can push an ATR out of here, then it's like, okay, this market has enough gumption to push an ATR out. Now if it goes retest, then can get outside the ATR, then I'm ready to go. See what I mean? That's just from my personal experience of trading so many of these. That's the best way to trade them. Like I told you at the beginning of the webinar, that's the art. If you want to say the minute you see that and you love the area, you want to go short, even in the zone, be my guest. You're going to learn the hard way that that's not probably the best way to do it, is my opinion. But you could, and I tell my room all the time, you guys may find a better way to trade these that's more exact. Please share your information. I'm always willing to hear different aspects different takes on this stuff, but it's just from experience. That's why I keep telling you guys, if you're listening to me in here or my trade room, you're bypassing having to watch 14,000 of these to determine the best ways to trade them. And here we go. There's your 90-50. This is a bearish event. Now what I wait for is that. If this could just scream down now, but this was not good enough. I potentially could have taken this short aggressively. It was close enough to the zone, and I've missed some trades this way because remember, we're talking about zones. This was real close. I actually should have been a little aggressive here. This was pretty close. I just was being a little greedy. I wanted to see one more move up by near the red lug. Here, what we'll do? I'll put this one on aggressively because I was close enough, and I haven't put on a damn trade this entire webinar. So I was looking at that, thinking I just don't want to like skirt the rules and confuse people. They're either like, well, that wasn't at the zone. Why did you put that in? That was real close. So my entry should have been at 90. So I'm gonna, if that pops back to 90, I'll go short. It's right. It's here right now, actually. Hold on. All right. Actually, this is the Izzy trade. I just put on the wrong trade. Hold on. Or put on the wrong account. That's 4. Get out of the one I just messed up on, as usual. Can't believe I made a mistake. That's not like me. Just kidding. All right, so what I did there, I was being greedy because I thought just the way this thing's trading, because all it does is go straight up. I wanted to see one more push into this inflection zone. I know this is a very important zone. I showed this earlier. I might have shown NASDAQ. This is where this has failed. You can see here, this actually was, it started way back here. So you can see how important this zone is. Watch this. And now look at this. This is why you want to keep track of these zones, like these areas, because they keep respecting them until they don't. And then that gives you information too. This was major selling tail. That's what you call directional conviction, right? That is a 60 point plus straight down. That's directional conviction. That's why that zone was drawn. Now, let's see when it came back there. That was in, what was that? August 2022, August 25th. Comes back up here in February. How did it do? Not real good. Came up here. Directional conviction. Tried again. Instant rejection. That's what tails are. Never came back. So the first test back, right? I could have potentially drawn this down. So this is the thing. This is why these are areas, right? I could have made this a wider zone and incorporated. This is what I actually should have done if I would have went back and looked at this. I should have made this a wider zone and been a very wide zone, but more happened over here as it progressed. Then you had tail, directional conviction, another tail. So that zone should have been actually there. Right? So I could have brought this down to there. So then this would definitely have been an Izzy trade. So watch this. That's why I'm saying these are areas. I'm just going to leave it right like it is because I want to show you what I did here or didn't do. This is why I was like, it's not quite at that zone, but this is close enough. I should have taken that trade aggressively. I got lucky. I got in this, maybe. So I'm short aggressively. And the reason is because it's almost in this. This is one of my trading setups called the Izzy. AK playbooks. Izzy. Inflection zone trade. Right there. And I take it aggressively. I don't wait for ATR retest failure because it may not come back to that area because it's so important as we've seen, as I just showed you. So I am short. I got lucky this popped back and gave me a chance to get in because I almost missed it. So I'm short. Now where does my stop go? All in the spreadsheet. Make sure this is correct. Yeah, it's about right. It's 4.32. So I got short at 90, right? So I am risking on this trade based on the ATR, based on the zone, based on the amount I want to risk. I'm risking 10.5 points. This doesn't matter. This matters. This adjusts with your volatility. I knew I could put on, actually I only put on 9, I could have put on 10. So I could put on one more here, hold on. Actually this is my live account and that's only half size, so I could put on 5. So I'm going to put on 5 there. All right, so this is telling me based on this volatility, based on my rules for these zones, I was in here, my stop goes at 4,250. And what is that? That's an ATR, just outside of an ATR above this volume event. So what I'm forcing this market to do to prove me wrong, and it's probably going to come up here, just the way these markets, and that's fine. It was my decision to take this trade. One, you have this liquidity up here, so you know that's going to get filled. And guess what? If this comes back and stops me out, There's very likely going to be another stop run, and then I'll be smack dab in that zone. That'll be red lug. I'll take that loss, and then I'll get right back in. That's trading. Remember we talked about you just keep taking the trade, keep taking the trade. If it's your setup, you take the trade. They take the trade. It's probabilities, right? So this may just do this. It may come back and stop me out. It doesn't matter, right? This is one trade out of about 5 million the rest of my life, right? So I take it. I got what I wanted to see. If it stops me out, I wait for my new event and I get back in. So anyway, what I'm forcing this market to do in this instance, I got in aggressively. Here's your volume event, and never got the ATR above there to disqualify it. So I got short aggressively. That was the Izzy trade. So what I'm going to make this market do, it's got to come all the way back, more than an ATR. It's got to get through the volume event, and it's got to push more than an ATR to stop me out for me to be wrong. That's why I give it that much room. And based on my experience, it's got the opportunity to move multiples out of this area. And that's what I trade for. And then then what I do, and this is more subjective, everything I've shown you so far is very systematic. You don't have to do really any thinking. You just put your stuff in and you follow the rules. Getting out, position trading, so the reversion trade is systematic getting out too. I showed you this. You get in there, you're out at the zone, you're done. This, you have to decide, and these could be your own areas too. These are my areas. Back to the trading zone document that you should have tattooed to your forehead. You're part of my room. Right here. They got to be so sick of seeing this because I show this every single webinar. I pay myself as the market makes money available to me. All these different areas I will piece out. That's why I want to have multiple contracts on. That's why you're doing yourself a disservice if you're trading one big E-mini S&P versus 10 micros. If you're in one, you're in or out. It's all or nothing. If you have 10 on, you get out of 2 here, 3 here, and these are the areas where I'll get out. Bloodwood levels, very important. Market profile, composite highs of those POCs. We talked about the market profile. Extreme standard deviations. We talked about those. That's when these algos snap it back. Spot gamma levels. We'll look at those. Struggle to get through heavy wrestling liquidity. So if we get to a liquidity area and it can't push through, I'll get out of some. Important predefined zone based on candle structure. These are the inflection zones we've been talking about this entire webinar. Or an opposing setup. So all these up until the opposing setup, I will piece out of some of my entry. If I get an opposing setup, I'm out of everything. So for instance, this short I'm in, right? I got in aggressively. So we start moving down. Say we hit one of these. Say we hit a market profile high. I'll get out of like 3. We'll hit VWAP. That's confluent with something else. I'll get out of 2. Say I still have 5 on. I'll hold those. I'm trying to get to the red lug. If I get to the red lug, I'm out of everything. But opposing lug. But if we get a opposing volume event and it turns bullish, I'm out of the whole trade. So that gives me an opportunity to catch big moves. See how that works? So that is. So what else do I have going here? Well, let's see, we have any liquidity? No, liquidity is above. And look, I'm almost certain this is going to get stopped out just because the way this market's trading, the way the liquidity here. But do you see in my trading? Do you see in this inflection zone description? You see anything about he's saying, I feel something, don't put the trade on? Oh, actually, it doesn't have the descriptions in here. My trade room gets the descriptions. But I'm just telling you right now, I don't have in my description, unless I feel scared or sad, or unless there's liquidity above, I don't take that trade, right? I'm aware of that. But this is following your rules and following your trade strategies. That's just like, again, the casino. When a guy comes in, to the dealers, the pit bosses look at the guy and like, wow, this guy looks really scary. This guy looks like he's going to wax us. Let's go ahead and shut down the game. Let's not take any of his, let's not deal cards to him, right? So the point is, they don't change their minds. They go with the math. So I put this trade on. Does it feel good? No, but I told you a little bit ago. My feeling is about 20% right nowadays. So my rules were to take this trade. I took it. Would I be surprised if it got up here and made one more run of this liquidity? Absolutely not, but that's not part of my trade plan. So hopefully you're understanding, I just put it on. If it loses, there'll be another one right around the corner. I put that one on. Over the long run, this is what your P&L will look like if you have an edge. I really hope that has been like the main theme today. I hope that I'm getting through to you guys where you start to look at your trading differently, because that's how you have to view it, or you will drive yourself crazy and you're never going to be consistent, ever. Hopefully that answered that question. Any other questions, Bruce?
Yeah, just Hector's been asking exactly what you just covered. So Hector, I think that, listen again. And I've been saying the same thing. You have to have an edge. You have to prove it to yourself you have an edge. So obviously Scott has his very specific setups. He's studied them. He knows they offer an edge, and he's trading them. He said that his gut he doesn't really rely on. So that should answer the questions for you. Other than that, I think that's it, Scott.
Right. And then the other thing too is, we've talked about like thesis and coming up with an idea of what the market is doing, and so I'm a day trader, so I don't care. It's long. The real time volume setups are king, so I will trade both ways, even if I have like for instance, like NQ, like I told you in the beginning of the webinar, this market did not look bearish at all. Now we're actually in Izzy now. So the minute we get a volume event in here, I'm going to short with both hands. But anyway, and this is so extended now. Now I'm not afraid to short this thing at all. Over here, when it's just breaking out of balance areas, yeah, I'm afraid. The point is, I could be extremely bullish of this market. It doesn't mean I'm not going to take short trades if the volume areas or the volume setups present themselves to be bearish, like we've talked about this whole webinar. What you can do, this is back to your risk stuff, right? If you have, so for instance, say I'm bullish this market. Well, every bullish setup I get on the SI indicator, I can trade bigger size. You don't want to be risking, normal risk could be about 2% of your account size. You should only be risking 6% in a day of your account size. If you hit 6%, you should be done. But in certain situations, so say I'm really bullish this market and I get a bullish setup, I could trade 4%. I could trade 6% if I want. You can bet your whole day on one trade if you love it. I'm okay with that. But if you're wrong, you got to shut down for the day. So you see the difference? So technically, if you're putting on 2% of the trades, you get 3 shots for the day. You can make it even less, make it 1%, and then you get 6 shots on the day. See what I'm saying? But if you're willing to trade bigger on, which I would be on the bullish setups, well, then I can trade 4%. So that's how you take advantage of your thesis aligning with what you're seeing in real-time volume. So that's what I do. Just a quick example, like yesterday, I think bonds, I still think bonds are going to get smoked, right? Just like they're doing. So there was a again, quickly, there was a failed breakout there and a breakdown of this balance. It was sitting here. We actually had a bullish setup at the end of the day yesterday, like in my webinar, right at the end of the day. And it was an ATR retest failure, barf trade. And I was like, I'm not putting this on and holding it overnight because I have a bearish view of these markets. So I didn't take that trade because of my thesis. So you see how you can, but if it was a bearish point of view, or bearish setup, I should say, I would have taken it and I would have held it overnight, because my thesis aligned with the real-time volume. So you see how I'll trade both ways, but when it aligns with the other way, I'll either trade bigger or hold it overnight, so on and so forth. By the way, this is in an Izzy zone too. If we get a volume set up there, I'll take that long. Other than that, the only thing I didn't really touch on here, and I highly, highly, highly recommend you guys use this. If you're learning, if you're struggling, there's no reason, if you come in my room and you're trying to understand stuff, there's no reason to be trading your own money. Right? These things are coming out of the woodwork now. Once again, everything I talk about, I use personally, and these are what I put my name on. This is the Apex. You can come in here. You can trade these different size accounts, and they've paid out $20 million. I've been with them for over a year. Use the code Pulcini 50 on here if you want to do that. It gives you 80% off a year, but you can do any of these, right? Most of mine are the 150. When you hit, there is right there. If you click on my site, there's the code. Right? And it goes for any sale they have, you use this. It doesn't matter if it's an 80, 90% sale, Pulcini 50 works. But get one of these and use this to practice. This is what's great about these, right? Because there's so many traders that can't practice in sim mode. They're like, it's just not the same. I don't care. I put on a trade and it moves against me. I just short more and more and more until it comes back. That's not real trading, right? This, you at least have some skin in the game. It's a very small fraction of what you would lose if you're wrong trading real money. Or real contract, or big size contracts or whatever. You can trade big size contracts, but I'm meaning real money. The point is, get in here, get one of these, and practice and get good at it. The thing is, if you blow out the account, big deal. You just got the reset fee is like $80 to reset it to start over. And if you do well, now you're funded. Now you have an actual account. The only thing I don't like about these, it's misleading. They say you have a $150,000 account. It's not a $150,000 account. It's a $5,000 account because that's all you can lose, right? So the goal of these things, like for instance, this one, you got to make $9,000 before you lose 5. If you make $9,000 before you lose 5, and it's a trailing 5, So you can be up. This happened to me a couple times when I first started this. I was up like $7,000. I gave back 5, so I was still up 2K. Blew out of the account because I had the trailing stop. That's what makes it difficult when you're doing the tryout thing. But if you do well, you make $9,000. Now you got a funded account. Now you have a $5,000 account you can trade. You don't have to trade $5,000 of your own money. It's a no-brainer to me for what you can, and it teaches you discipline too, because you got to follow the rules and not have the drawdowns and so on and so forth. So that's when I'm talking about Apex. So I like it so much. I just decided to help us with these trading strategies to get these things figure out, and that's all part of this. You can see in this dashboard, that's all these things, all these portfolios. I can keep exact stats on everything that I'm doing here with these Apex accounts. Right? So each one of these has its designated Apex account that I'm trading. Some of them have blown out. Some of them, this one's live. This is what I was talking about. So I blew it out the first time, did it again, qualified, got the live account. This one's live. And a couple of these, this one's close to being live. So these will all be live eventually. But guys, if it's an edge, it's not going to be. Sometimes you'll get lucky and get a straight shot, but it'll be one of these, right? So that's what I'm doing with those. But I highly recommend that. We didn't really touch on that. Other than that, I showed you guys how to get the Bookmap and what you need to do it. Here comes your retest of the zone, by the way. I took this aggressively, but here we go. It's coming back, which I expect. That's another thing. If you understand how these markets work and how they come back to the volume areas, even if you shorted, you mirrored me, which you shouldn't be doing. You should be doing your own stuff. But if you mirrored and got short with me, you shouldn't be panicking, because I just told you it's about 70% or more that it's going to retest the zone. So don't panic out of rotations when there's nothing going on. These are algos now taking their money of all these guys that get short and then panic out of their trade. Force these markets to get above the volume event to stop you out. Other than that, I'm expecting that, and if that does happen, then I could put the BARF trade on too. That's the blind ATR retest failure. Then I'll have 2 strategies on. See how that works. All right, I'm out of gas. Any other questions, Bruce? If not, I'm done. At least we got 1 trade on for right now. You there?
Yeah, sorry. One more question here. When using ATR, do you stick to a specific time frame or length? Example, a daily ATR.
You know, if you're a longer term trader, say a lot of people have to work, right? They have normal jobs and they can only put on trades for long term. You can use this in the same way, wait for your volume events, and then you can just plug in an hourly ATR type of thing, right? You better be thinking that the market can move multiples, right? So if I plugged in this hourly ATR, well, that's 13 points. So you got to be saying, okay, I love this trade up here. I'm going to use the hourly ATR. I think we can get at least 20 points down from here to the zone, that kind of thinking. But the way I use the ATR, I will keep adjusting it. Like you see me do this webinar, I keep changing. Once I get filled, these prices are set in stone as far as my stops, because I've been burned by, so the ATR is like 4.39, right? And I'll say I got in that trade, my stop's up there, and then this shrinks, this goes down to like 3. Well, then I'd be like, well, why would I risk all the way up here? I'm going to shrink that down now to a 3 ATR and move my stop down, move the price down. So many times the market will come back and tag that exact, and then it'll go. So once I will keep changing that until I'm filled. Once I'm filled, then these all, obviously there's the fill, but my stop stays where it's at. So if this shrinks right now, I'm not going to bring this stop in. And that's the only thing that I keep static. Other than that, I keep changing it, and these values will keep changing. Like I said, if this thing, someone comes out and says something, this changes to a 13, right? Well, now all my prices change, and then I trade off of that if I'm putting on a new trade. So that's how I trade with the ATR. Hopefully that answered your question. But like I said, guys, I do this every day, twice a day in my trade room, exactly what you're looking at. My trade room is very active. There's a lot of very, very capable traders in there that have been in there for a long time, that are, they post all their stuff. You just see here quickly, I'll hop off. They're posting charts, they're posting setups, like all this stuff. Like, this is all helpful. This helps me because I get sidetracked. I wish someone would have told me about ZS today, but just kidding. It's not their responsibility. And you can see, guys, they're putting in examples all day long in here. So if you have a group of collective traders that know what they're doing, and if you don't know what you're doing, you will eventually. You can ask questions in here. It's now I answer them, but they answer them. You can see when there's setups, and you can learn in a community, and that's what this is, right? It's kind of just like the Bookmap Discord. So That's what you get from my room. All right, Bruce, that's all I got.
All right, that was a lot. Uh, but yeah, no, thanks, Scott. Excellent webinar, Pro Trader webinar, and it'll be part of the series here. And yeah, let's wrap it up. We'll call it a day, and I think we answered all the questions for everybody. So yeah, thanks again, Scott.
Awesome. Thanks for having me. I do these every Thursday on here too. These ones are free, so you want to keep getting used to this stuff. Come back and watch, and you're going to learn a lot on how what really makes market moves, and that's this stuff. It's not lines on a chart. It is real time volume. All right. Thanks for having me, Bruce. I'll see you next week.
Bye bye.